Thanks for joining us for this month's Economic Update. I'm John, founder and financial advisor at Beyond Wealth Advisors.
Hi, and I'm Kelly, financial advisor here at BWA. We have a lot to unpack this month, from tariff and trade wars to job numbers and market moves. So let's dive right in.
Let's do it. So let's start off with the big headline, which is the U.S. economy actually shrunk a little bit in the first quarter, down about 0.3%.
Yes, it's the first time we've seen a negative number since 2022. And a big reason was the flood of imports from companies that were trying to beat new tariffs before they kicked in. So that ended up hurting our trade balance a little bit more than usual.
Yeah, it's been crazy for sure. But you know what? Not all news is bad news. We've definitely had some highlights. Consumer spending, which really drives most of the U.S. economy, was up about 1.8%. People are shopping, they're traveling, they're spending on services. The consumer truly has remained active through all of this.
Yes, exactly. And inflation has cooled off a bit too. The Fed's preferred measure came in at 2.6% year over year. But here's the twist. There's always a twist.
There's always a twist.
Other signs show that inflation might be heating back up again.
Yeah, and that's a concern for sure. And one area is the job market. So how's the job market holding up?
The labor market is steady, and companies aren't cutting staff in a big way.
Yeah.
So we added 228,000 jobs in March, and the unemployment claims are steady. But we're keeping an eye on those areas like transportation, hospitality, because those sectors can really feel the effects of these tariffs.
Yeah. It's so interesting how it all just works together, right?
Yep.
And even if we look overseas, we see that there are some signs of slowing. Europe had a bump because of the tariffs. People were rushing to beat that. But in China, the impact's pretty clear. Export orders are falling. Factory activities slowed a little bit. Back here in the U.S., some uncertainty as well around the trade policy, making businesses and consumers nervous. All of that leads to that consumer confidence, which is down just a bit. And when that happens, people tend to pull back on spending.
True, but we're still not calling for a recession, at least not yet.
Yeah, that word keeps popping up for sure. However, if things do slow down, maybe more than expected, maybe not to recession territory, there's definitely room for a bounce back. We're seeing this already. The trade deals that are getting done, potential tax cuts. Certainly the Fed could still cut rates. All of that could impact the rest of this year, certainly heading into next year.
Well, so what does that mean for investors?
It's such a great question. It's been a wild ride for sure. The markets have just been all over the place. April was rough, of course, with Trump's tariff announcements that triggered a sell-off. The S&P dropped nearly 19% from its February high. And then the White House paused 90 days on the tariffs, and the markets kind of reignited. We ended April actually with just a small loss. And then just a few days ago, we got another pause on China, and that really has brought the markets back into positive territory. I'm not sure anybody saw that coming a few weeks ago. And then on top of that, earnings season has also helped. A lot of companies have actually beat expectations, and that certainly brings back some of that consumer confidence.
But not everyone is optimistic.
No, they are not.
We're seeing a lot of CEOs pulling back on their guidance, which tells us that they're still a little unsure about what's ahead.
Yeah, and I think that's the key word right there, uncertainty. Even when you look at the big tech, right? Companies like Microsoft, Apple, Google, Meta, Amazon, NVIDIA, they've all had a pretty tough year. 4 of those 6 actually entered bear market territory, even though their earnings were solid. So I think, even in that mega tech, mega cap tech area where that index is down over 13%, these valuations still look pretty cheap, but these companies are just trying to figure out what the landscape's going to look like going forward.
Yeah, absolutely. So what's our take moving forward?
Yeah, speaking of going forward, right? Well, volatility's here to stay, right? We say it all the time, choppy waters are around. So tariff headlines, policy uncertainty, earnings pressure, those are going to continue to shake things up. And honestly, that's why we're focusing on those sectors that are backed by kind of big trends. things like AI investments, U.S. manufacturing, certainly government spending, and this aging demographic. These are the kind of things that have the earnings power that can really weather these uncertain times.
Yes. Well, Fred, that's our economic update for May. Thanks for spending a few minutes with us.
Absolutely. Well, that went quick. And Kelly, you always do such an awesome job.
Thank you.
As always, stay informed, stay invested. We look forward to seeing you next month.